Hello, my name is Mary Coupland, and welcome to The Road Ahead. Through a series of guests, we are going to help you navigate your own road ahead as you age. We will help you and your parents prepare for your journeys. Let's face it, nobody wants to find themselves in a crisis mode simply because they didn't have access to information well in advance. I am the publisher of Compass and Clock, and together we're going to help you achieve your best future. Today, my guest is Joan Qvigstad of Fairway Mortgage, and Joan is a reverse mortgage specialist with 14 years experience. She loves to educate folks on the reverse mortgage benefits, how to protect your home's equity, increase your monthly cash flow, and enjoy a secure retirement. Joan also provides free seminars throughout the year on the reverse mortgage topic. Joan, welcome to The Road Ahead.
Thank you, Mary. Glad to be here.
I'm so glad to have you here. As we just told our viewers, today's topic is going to be the reverse mortgage. So why don't we start off with that? Please tell us what a reverse mortgage is.
Reverse mortgage is a government-insured loan that allows you to access a portion of your equity through tax-free cash that can be used for a variety of different uses and hopefully enhance a retiree's lifestyle. It's the only loan that allows you to completely not have a mortgage payment for the rest of your life or as long as you live in the home. You still have to pay property taxes and insurance and maintain the home, but you'll never have another mortgage payment.
Okay, that sounds too good to be true. So I'm really excited that you're going to be educating us on this topic.
Good.
Now, when I've heard the word reverse mortgage, I've also heard of something called a HECM, H-E-C-M. Are those the same?
Well, they're actually different.
Okay.
The HECM, or that's the acronym for Home Equity Conversion Mortgage.
Okay.
That program is FHA insured by, and it's different because it is the newer version, the more improved version of the old reverse mortgage. The reverse mortgage started over 30 years ago with the Ronald Reagan administration, and like any new program, there weren't really a lot of guidelines to go by. So the program has evolved dramatically over those 3 years to the point now that it's insured and much safer for the borrower.
So, can anybody qualify for a reverse mortgage or a HECM?
That's a very good question. One of the borrowers or spouses needs to be at least 62 years old. Okay. But if a spouse is younger than that, they still can, that household still can have a reverse mortgage. The home does have to be their primary residence in order to get a reverse mortgage.
How many months out of the year?
And I was just going to mention
Sorry.
that they have to live a little over 6 months out of the year. So this is a perfect program for, say, someone who likes to vacation in the winter in warmer climates or likes to travel. As long as they stay in their home, it stays their primary residence for a little over 6 months out of the year.
And it doesn't have to be 6 consecutive months.
That is correct, absolutely.
Okay.
And it's not that you have to check in or anything, but no one double checks to make sure if you're still there. But what they do is they realize that in retirement, you hope to be able to travel or to be able to go see family or to be able to have that flexibility to really follow their dreams or what they would like to be able to do in their retirement.
When I think retirement, I think travel. To me, they're synonymous. At least that's what I want it to be in mind. So reverse mortgages started 30 years ago. So tell us how the FHA insured reverse mortgages of today are safer than the reverse mortgages of the past, because I'm sure our viewers are anxious to hear that.
Yes, there are a lot of myths that people still carry through to the reverse mortgage of today. One being that if you get a reverse mortgage, you can never get out of the loan, and the bank takes your home when you either pass away and your heirs won't receive anything. Those are some of the big myths. What has changed with FHA is that, number one, the owner retains the title of their home. still have complete control over the home, whether they want to stay in there for as long as possible or if they decide to sell. Also, if they pass on the home to their heirs, the heirs have the right to sell the home or even pay off the loan and keep the home if they choose to do that.
So the same way any mortgage would work.
Any traditional
You own the
mortgage.
home, you own the title, the bank doesn't own it.
Correct.
Okay.
And when the time comes, if they want to sell the home, all they do is pay off the balance of the loan, and all the remaining equity or even the appreciation of the home over the years goes to the homeowner or to their heirs.
Right, they retain it.
Absolutely.
Okay. So if you want to use a reverse mortgage, is it only for refinance purposes, or can you buy a home with a reverse mortgage?
You know, a lot of people don't realize that you can purchase a home with a reverse mortgage.
Oh, okay.
And it's perfect for one of those retirees who might be in a home that's too big and they want to downsize, or what we call right size, out of a home that has a lot of square footage, maybe onto a one level, or even relocate to be closer to family. Or into another climate. And a lot of times when they sell their current home, they'll have a portion of equity. It could be $100,000 to more than that. Well, when they move to a location, what they would hope to do is not have a mortgage. So it limits them. For example, I had a 70-year-old couple. They relocated from Iowa to be closer to their son here in Bremerton.
Okay.
They had $200,000. They thought that was a lot of money in Iowa because the market is a lot less expensive.
Right.
But coming to Bremerton, they were living with their son and family, but it took them 2 years trying to find a home that of the same value or quality that they had in Iowa, and they just couldn't find it. So then they came to came to a mortgage company, and they decided, well, maybe we have to get a mortgage. Well, because of their base income, they could only qualify for a very small mortgage that would allow them to purchase a home that's $250,000. Well, 6 months later, they still could not find a home that really met their needs. So when they came to me and we talked about the reverse mortgage for purchase, that same $200,000 they first started with allowed them to purchase a $325,000 home and still not have a mortgage. It was a one payment, down payment of that $200,000, and they found the beautiful home within 48 hours of knowing that they could qualify to purchase a home with a reverse mortgage.
So they put the investment into the house.
Yes.
And now they can age in place.
Correct.
And they don't make a mortgage payment, and but they do pay their taxes and homeowners insurance.
Absolutely. Just like anyone who owned their home free and clear, they're still responsible for taking care of their property taxes and insurance and just general maintenance of the home.
So when I introduced you to the viewers today, I said some of the things that the reverse mortgage benefits of it is that it can improve monthly cash flow.
Yes.
Can you give us an example of how, if somebody used a reverse mortgage, that would play out?
Sure. There's 3 options that the new reverse mortgage insured by FHA offers. You can take it as a lump sum to be able to, say, pay off a current mortgage. That would free up that monthly mortgage payment. That could be from $1,000 to $2,000. Just imagine if you could have that increase of cash monthly, how that would improve your life and give you more options.
So you're saying
So
that
first
option is to
pay off
do
a
a
mortgage.
refinance on the
Refinance.
house that you're living in, and it would pay off your current mortgage, and you can create cash flow then, because now you're not making a monthly mortgage payment.
Correct.
Okay.
The second is if you, say, own your home free and clear, and you would just like to set up a tax-free line of credit. That line of credit would be sitting there as an emergency plan to be able to access funds within 3 to 5 business days. You send in a draw request form, and money from that line of credit is automatically deposited into your account. If you don't use any of the line or the unused balance of the line of credit, The benefit with the reverse mortgage that's insured by FHA, that unused balance will grow between 4 and 5% just by sitting there. So it will allow you to have more money in the future should you need it, especially if you need it for in-home care or remodeling of your home, or even wanting to take a trip that you haven't had an opportunity to do. So it just will sit there and be available to you when you need it.
So it's an option where it creates an emergency fund, so to speak.
Correct.
That you don't have to have an emergency for, you know, as you said, you could travel with it or whatever. But if somebody, as you know, let's face it, people that can use a reverse mortgage are 62 years and older, so we're getting older, so long-term care costs are expensive. So instead of tapping into IRAs or having to do the spend down so that you're Medicaid eligible, they can use this money for their long-term care costs.
Absolutely.
And for fun too.
Well, think about it. If you have a limited amount of retirement funds, whether you're invested or work with a financial planner, and if majority of people, they don't think about accessing equity in their home. If they have an emergency, a furnace goes out, or medical expenses that were needed to be paid, they would have to go to their financial planner or exhaust those hard-earned retirement funds that can cause a penalty for taking out the money early, as well as it's taxable income. So now their tax bracket, they might go up and have to pay more taxes, and they've liquidated an asset that could have continued to grow. Right. But with the equity in your home, the loan on your home, a reverse mortgage, is tax-free. And you don't have to pay it back. You only pay the loan back once you decide to sell, or 12 months after you pass away and it goes to your heirs. They have that amount of time to decide what they'd like to do with the home.
What is the third option? You said there were three benefits.
Yes, the third option, and you know, many of my clients, especially widows that have lost their spouse, 9 times out of 10, they lose up to 40% of their income because their spouse passes away. They lose a pension or that other portion of Social Security. But they're sitting in a home that has plenty of equity. So what we can do is set up an actual monthly payment that goes directly into their checking account or bank account that can add and replenish the cash flow that they lost from that income if they've lost a spouse, or even through divorce, and they have that ability to access that equity. I think it's really important for people to realize that the HECM, or the home equity conversion mortgage, is not the old reverse mortgage that was sold as the loan of last resort. What we encourage, and many financial planners and retirement experts encourage, is to get the reverse mortgage line of credit or to pay off your mortgage earlier than wait till you're in a desperate situation, because that actually proves you can extend the amount of retirement funds you've worked so hard to save for retirement, and you won't have to worry as much about running out of money. You know, the funny thing, well, not funny, but a statement that said that individuals are more likely to run out of money if they don't have a reverse mortgage line of credit to access equity in their home.
The reverse mortgage is another resource of income, and many folks own a home. And being educated on another avenue in which to have another cash flow is incredible. We're out of time right now, so if you just have one parting thing you would like to tell our viewers, I would highly suggest you.
Okay, I'll just say very quickly, if you've ever thought about wanting to access more money to make your retirement more secure and to be able to meet your needs, please look into going to a free seminar or to call for a consultation. It's very important to learn about the new facts and changes and benefits of the FHA-insured reverse mortgage.
Thank you, Joan.
Thank you.
You really are an expert in your field. For those of you out there, thank you so much for a few moments of your time today, and I look forward to seeing you on the next episode of The Road Ahead. Have a great day.